Good evening, good afternoon, good morning, wherever you are. My name is Neto. I work for the United Nations Development Program. I'm the director of the SDG Finance Sector Hub. It's my pleasure to be the moderator for this excellent panel today, where we are going to be presenting the report of the United Nations Secretary General Digital Finance Task Force, its key findings along with the action agenda, and bringing them to life through moderated discussions among leaders from the finance FinTech. I will introduce your panelists in a minute. And on behalf of UNDP and UNCDF, I would like to thank the Singapore FinTech Festival for their support in our partnership. Without further ado, I would like to give the floor to Judith, the Executive Secretary of the United Nations Capital Development Fund, to deliver an open remark. She will address us with a video message, which I hope is just going to come on live now. So over to the video there.
Good evening to all. My name is Judith Karl, and I am the Executive Secretary of the United Nations Capital Development Fund. UNCDF aims to make public and private finance work for the poor in the world's 47 least developed countries. Over the past 18 months, UNCDF has been the co-host with UNDP of the Secretariat of the UN Secretary General's Task Force on Digital Financing of the Sustainable Development Goals, an initiative supported by Germany and Italy, whom we thank tremendously for their support. The task force was comprised of an amazing group of 17 leaders and innovators from financial, technology, regulatory, and international development communities who engaged in thought-provoking discussions, and that engaged with thousands of individuals and organizations from around the globe, whom we thank for their insights, expertise, and guidance. It is my pleasure to welcome you to this session on the findings and recommendations of the final report of the task force titled People's Money, Harnessing Digitalization to Finance a Sustainable Future. The report sets out an ambitious, practical action agenda, which is built around three areas. One, advancing catalytic opportunities to deliver financing for sustainable development. Two, building the foundations for sustainable digital ecosystems. And three, strengthening inclusive international governance. As all of us in this room know, digitalization is already a force for good in aligning financing with people's needs. We also come together today during an unprecedented crisis, the COVID-19 pandemic, which has only amplified the report's findings that we can harness digitalization to support vulnerable people, reduce inequalities, sustain livelihoods, and strengthen solidarity. Digital disruption creates a historic opportunity to reshape finance. Digitalization can also support citizen-centric finance by empowering citizens individually and collectively in financial decision-making. And of the utmost importance to the UN system, harnessing digitalization can help achieve financing the SDGs, for example, by deepening inclusion, addressing climate and biodiversity challenges, funding sustainable infrastructure, financing SMEs, and opening up new channels for individuals to put their money to work for them. As examples of the catalytic opportunities noted in the task force report, imagine a farming cooperative connected to a digital task force where it sells produce, accesses financing based on its transaction history, and gets insured against climate risk with automatic payout in case of disaster. You may hear more about this example from DBS, one of our panel speakers. Imagine financing a multi-million-dollar bridge or school through the millions of small investments made from ordinary people's microsavings, giving them dividends and the benefit of improved infrastructure that they can use every day. You may hear more about an exciting project illustrating this example being implemented in Bangladesh from UNDP Bangladesh, another of our panel speakers today. Imagine over $30 trillion invested in global financial markets, aligning policies and citizens' choices through the use of smart data and analytics. This is just the tip of the iceberg as we see SDG-aligned investments increasingly outperforming in global leagues of financial success. You may hear more from today's panel speaker from Refinitiv, on their work to aggregate 25 years of data on project finance, loans, risk profiles, and other investment parameters and ESG metrics to create a comprehensive overview of infrastructure projects. These catalytic opportunities are noted as such not just because of their size and scale, redirecting trillions of dollars towards sustainable projects, but because they have the potential to trigger a systemic shift to better align finance and sustainable development. In addition to these opportunities, the task force's second action agenda item is to build foundations for sustainable digital ecosystems. I'm proud to announce that UNCDF, jointly with UNDP, is taking concrete action on this agenda by developing a joint offer for governments to embed digital financing into their national financing frameworks in order to align resources into SDG priority areas. A third action agenda item, strengthening inclusive international governments, has led us with UNDP to initiate a global dialogue on big FinTechs and their impacts on the SDGs. As many of you are aware, big FinTechs are playing an increasing role on the global stage, with cross-border spillover effects on many areas of sustainable development across developing economies. Financial regulators dealing with these big FinTechs have mostly been concerned with financial risks, gradually opening up to financial inclusion, and perhaps more recently, climate risks. But they are not embracing broader SDG impacts of these platforms, and the voices of developing economies are too often absent. Our new initiative will advance governance innovations that are needed to secure that big FinTechs benefit all. We thank Switzerland for their support of this initiative and Kenya for their role as co-chair with Achim Steiner, the administrator of UNDP. You will hear from our digital ambassador during today's panel about this initiative. The task force has also highlighted the barriers and risks that could further divorce digital finance from sustainable development, deepening exclusion and inequality. Some of the barriers identified include inadequate digital infrastructure, access and capabilities, while digital risks include gender biases, increased short-termism, cyber vulnerabilities, and market concentration. Much work needs to be done to address these barriers and risks, and I'm sure many of you in this room are working on these issues. Now imagine all this work not as exotic and exemplary, but as how global finance, public and private, could work everywhere and always, leveraging digital technology, strengthening governments' abilities to deliver SDG impacts, and empowering people in delivering citizen-centric financing of the SDGs. This is the vision of the task force, and what it has concluded is absolutely possible, setting out practical recommendations for how to get the job done. The task force advocates an action agenda in the spirit of catalyzing an ecosystem of innovation and experimentation across public, private sector, and citizen engagement. It is guided not only by the intrinsic and opportunistic realm of what could happen, but also by a purpose-led policy, incentives, and regulatory perspective that facilitates a greater alignment between our financial systems and markets and the development imperatives of our time. Key amongst the alignments being sought is in the addressing of inequality and sustainability. In that context, while we cannot second-guess the future given the rapidly evolving horizon of how technology, economies, and our societies will interact, we can maximize opportunities and minimize risks in a highly dynamic but also volatile moment of history. The full support of the international community to seize upon the task force's recommendations and synthesize its work into actionable offers will be required. UNCDF is working with sister agencies and other stakeholders to provide support for governments, including through a COVID-19 lens, to increase people's control over and use of their own money to pursue sustainable development locally. I look forward to today's discussion on digital financing of the SDGs and ask you all to join UNCDF, UNDP, and the whole UN system to think about how digital finance can be directed to achieve the global sustainable development goals. Thank you, and I hope you enjoy the panel discussion.
Thank you very much to my dear friend Judith. I think it is, redundant to say how important the issues of digital, take into consideration how we are all coming to you today via digital form in that sense. As Judith realized, I think we are in a critical moment to be able to take forward the recommendation of this task force who spent 18 months working in bringing us to this moment. We have 4 panelists today. Mr. Anir Chowdhury, Policy Advisor of A2I in Bangladesh, a colleague from UNDP. Mr. Mikkel Larsen, Chief Sustainability Officer of DBS, and Aiaze Mitha, Digital Finance Expert, Digital Ambassador of UNCDF, and our technical leader on the big FinTech governance dialogue that Judith mentioned. So without much further ado, let me start it by posing the same 2 questions to the 3 panelists, right? So the international community, that's the first question, I'll give it to you. The international community often think digital finance and sustainable development quite separate. And the task force says that digital finance might be the route to achieve the sustainable development goals. What does it mean in practice? Where does FinTech sit in the broader SDG agenda? That's the first question. Second question, by the end of 2021, the world we live now will probably look very different than at the beginning of 2020. Already does, I would argue in that sense. The current health and economic crisis that we have will transform our way of living, working, investing, almost each part of our lives. What scenarios are possible and how digital finance could respond to it within the broader agenda of the Sustainable Development Goals? So I would like to turn these 2 questions to my first panelist, Anir Chowdhury, Policy Advisor to the Government of Bangladesh. Anir, the floor is yours.
Thank you, Marcos. Good morning, good afternoon, and good evening. I guess that's the standard greeting these days because we're all over the place. So Judith, in her introductory remarks, talked about some things that are very important, some philosophies. I'll just repeat 3 philosophies that really resonated in the work that I've been doing in Bangladesh. The first, she used the word citizen-centric. So citizen-centric finance and regulation. So that's the number 1. Number 2 is integration. A lot of the things that we are doing requires integration across multiple agencies and also public-private partnerships. So that's the realm of bringing people together. And the third, that is important, both disruption and sustainability. Often what happens is we disrupt, but that disruption remains in the lab and it does not scale up. So I think disruption that is scalable and that is sustainable, I think is important. So those are the 3 things: citizen-centric, integration, collaboration, and disruption that is sustainable. So those are the 3 philosophies that I'll be working with. So COVID really has given us what I call the COVID dividend. So we have seen in the past digital finance helping the poor, and I'll talk about maybe a couple of examples from Bangladesh, which will exemplify what the possibilities are, what the potential is today, and also what will happen in future. So what we have seen, so I'll talk about acceleration first. We've been working for the last 3 years to digitize our social safety net programs. That's about 14% of our entire national budget, and it's been increasing in the last few years from 12% to 14% in the last 2 years. And this was very critical because this was one of the ways that we were able to reduce poverty in the last 30 years by half, 25 to 30 years by half, and extreme poverty also by half in the same time. Digitizing the social safety nets was a way to reduce time, cost, and visit. This is a metric that we use for any government service delivery. So how much time it requires to access a service, how much does it cost, and how many visits do you have to get social safety nets. Sometimes it's actually costly because it's far away. You have to go, stand in line, maybe sometimes stay overnight in a place just to get your monthly social safety net benefit. And you actually spend a generous portion of the benefit in that travel. and they may be staying over. So what can we do to get that benefit in the hands of the poor, in the hands of the beneficiary? So that was the initiative that we started about 3 years ago. We were able to launch that initiative by the Honorable Prime Minister about 2 years ago. And before COVID happened, we had about 1.5 million of our citizens, beneficiaries, across many different ministries. So again, the issue of integration came together. So many different ministries had to be integrated with a national ID. So all these beneficiary disbursement was done against the national ID, biometrically verified national ID. So that was another integration point that we had to do. So we went from 0 to 1.5 million in a matter of maybe 1.5 years. COVID almost doubled it in a matter of months because we saw huge acceleration there. We also saw similar things in the garment sector. We have about 4 million garment workers, mostly women, who used to get most of their salaries and benefits in cash. And we've been trying to work with the government industry, about 4,000 different factories, to move from cash to cashless payments. And again, out of the 4 million, about 1.5 million registered. During COVID, because many of the factories closed down, the workers moved away. So they needed to be paid, and cash was also unsafe and problem-ridden. And there was a lot of leakage that could happen because if you're paying with cash. So again, cashless payment, digital finance actually provided a way out. We saw about 2.5 million new entrants coming in. So we saw huge acceleration there. Then let me come to the second point of adoption. We also saw new adoption. 5 million households were going to be paid about $30 in a very critical time frame, April and May time when they lost jobs. They became the new poor. So again, we employed digital finance, mobile financial services, agent banking, which is the traditional banking done in a digital way, using about 7,000 locations across the country, where you could actually do digital money withdrawals. In cash, then you could actually spend it. So we used digital finance again tied to our national identification scheme, and sent money to about 5 million households who were not in any kind of database before, any kind of social safety net. These were the new poor. So what we saw with the electronic know your customer, EKYC as we call it, EKYC regulation that we adopted very quickly just before COVID, and that was used during COVID in a massive way. So we could create bulk accounts, millions of them. And we were able to help these 5 million poor households in a matter of weeks. So this was done in a matter of 4 weeks. So that was the new adoption that we saw. Then let me talk about the disruption innovation. And Judith talked in her introductory speech about a crowdfunding model for SDGs. So SDG financing is a critical issue in Bangladesh. We are looking at about $20 billion in SDG financing this year. And this number will actually increase over time. By 2030, we're looking at $150 billion for SDG finance. So the needs are going to increase. But availability of finance, 50% of which actually comes from overseas, will actually decrease. Because the countries that finance us, they're having their own problems with COVID, so that finance will be less. Also, the cost of finance will increase. We're seeing that local finance is about 15 to 20% cheaper than overseas finance. So we want to look at local finance, and we have been looking at exactly where that would come from. And we realized that there is about $120 billion of idle savings or unproductive investments that are made, about $60 billion in terms of formal savings that are not directed to SDG financing, about $40 billion, over $40 billion in informal savings that go under mattresses and don't even make it to the formal system at all, and about $15 to $20 billion of remittances that are coming in, and that can be diverted into productive investment, and about $2.4 billion in zakat, so Islamic donations. So we started working on this last year with UNCDF and UNDP, obviously, to develop a scheme and the right infrastructure, the right market mechanisms, the right money managers to get small funders, small savers. So we're talking about a person saving maybe $5 $10, maybe $1 even a day into this scheme. So this is like a mobile top-up that they do that goes into a pool to create mega savings. So we're looking at micro savers creating a mega saving, and then this mega saving becoming a mega investment for many types of SDGs. So be it bridges, be it schools, diagnostic centers, which is critical right now, water sanitation programs. So small investments turning into small savings turning into mega investments. So this was the scheme that we worked on, developed the technology. Then COVID came. So we tested this scheme during COVID as donations, not as investments. So we basically launched this product in May timeframe, and wanted to attract donations because a lot of people wanted to donate small amount of money, and we saw tens of thousands of donations coming in the range of $10 to $12, which you could not do with traditional instruments. You could not donate $10 to $12. There is no mechanism to donate at the national level for COVID recovery. And we employed money managers, a number of them, who actually took this money and used this money for local projects, for food delivery, for medicines and all of that. So we saw how digital finance really has accelerated before, has created new adoptions, and has disrupted many different markets. And we're looking at this scheme in 2021 in a scale-up mode. So, I mean, should I answer the second question also, Marcos?
That's okay. Let me go and give the floor to Mikkel now.
What 2021 will look like? Sure.
Your examples have been really exciting in terms of seeing in the middle of a pandemic, in the middle of an emergency of unprecedented nature, how digital finance serves the purpose of facilitating government services, mobilization resources, and everything else. So thank you, Anir. Mikkel, same questions to you from the DBS point of view. The floor is yours.
Thank you very much. Obviously, as a bank who believes that digitalization is one of its fortes, we were very excited about being part of the drafting of this report, and we very much lend our support to its recommendation. What I'm going to try and do is I'm going to try and explain to you first how I generically see the value of digital finance as an enabler. And then I'm going to give you a couple of examples of things that we as DBS has been excited about being part of. So I think one of the key things that we have to realize is when we talk about financing the SDGs, we have to be mindful that not everything which is economically viable for a country is a commercially viable venture for a private entity. And sadly, we see that show up again and again with many of the SDGs. We know that more finance is needed in parts of Sub-Sahara. We need it in Southeast Asia. And yet some of these things are just inherently difficult to finance because the economics doesn't show up. But where I think digital finance has an enormous part to play, or one of the places, is in reducing the risk that comes from lack of transparency. So obviously, when a commercial entity makes decision, it will balance the risk, and part of that risk is the lack of access to data with the return that it requires. And once you start to model or change that risk-return equation, you will start to see funding flow much more easily. So when I think about where digital finance in its broader sense can help in terms of data generation, I think of it in 4 areas. Data capture first. So we know that today data is only really available for a very, very small subset of companies today and projects, mostly those that are listed, but not for unlisted company, which after all makes up, in the part of the world where I live, 90+% of the economy. So the ability to use AI to scrape some of that data and make it accessible at a price that is cheaper is crucial. Today, these things are often behind paywall, meaning that they're only accessible for those who have the ability to pay. The second thing is really around the data aggregation and making these things transparent. We know, again, that the data sit in different silos around the world, around different companies. And so therefore, comparing the viability of projects across them is limited. And we are starting to see some of the early startups that try and compare these, but we need a lot more in terms of a transparent, open API infrastructure for that. Once you have that, you can start to price some of the externalities. And perhaps the one thing that I'm most excited about is the work that we started to see and that we've been part of as well as DBS in trying to price some of these externalities. Only then will we start to really start to see changing in decision making. Now, so for our case here, we've been doing some work around impact measurement and trying to understand with the data available what is really the impact of a dollar made. And once you know these things, you can start to say, well, not just from a risk point of view, but from an impact point of view, what are the changes that we need? And then finally, we need to have much better financing platforms. We need to be able to make crowdfunding a lot more easily available. So that's kind of how I see you can reduce the risk and by an investment, just on a very generic level. But I want to talk to you now about 3 areas where concretely DBS have been involved and where I see that the ability to have digital services makes all the difference. The first one is, of course, we all recognize that there's 1.7 billion people without access to formal capital. And one of the reasons is that they don't have a credit history. Now, the ability to now use other types of data, social data, to effectively create credit histories for these people is enormously powerful. And we've been doing some work in Indonesia and India, teaming up with other parties than banks to try and get that running. And the results are encouraging. It's not an easy place to do, but once you make it happen, you'll start to see that the money can flow to some of these people. I do think that one of the things the report does very well is it calls out that these things are not without risk. And especially once you deal with such an amount of personal data, we got to be careful that we don't end up creating more negative externalities to those people. We have to be careful that when we do choose to use this type of data, that we remember the situation when they're offering up this type of data. Normally, these people don't have an alternative. So the whole data transparency, data protection has to be very strong in this area. The second area I wanted to briefly mention is one of the things COVID for sure have done. It has reduced the trust that we have amongst countries, and therefore the whole supply chain essentially breaks down in different places. We are much less likely to want to buy products from far-flung places where we don't really know what the source is and how it's been handled. And so again, this is where digital could come in. So we built a platform that allows you to now track the origins of raw materials, in our case is rubber, all the way from source and all the way to final use. As you start to see these type of platforms, we're not the only one who've done that, but they come to life. You will start to see that you can add data to this, so that only will you be able to see the origins of this, you'll also be able to see how it was handled, by whom it was handled, what were the touch points. And this is especially relevant in a post-COVID world, where the exact location, where it came from, who's been involved in this is crucially important. Satellite technology has a crucial part to play here. Why would a bank want to get involved in this? Well, also because from our point of view, trade finance really only works if you either have the transparency and or a price premium from an offtake contract in the end. So our willingness to finance the suppliers obviously increase once we know these things. And then finally, I want to share with you some work that we've been doing on carbon credit for nature-based solution. It was something that was announced earlier this week as part of the opening speeches by the ministers and the MD for MAS. So if you think about what the problem is in carbon credits today, it is essentially one of trust again. We know that good solutions to carbon credits and carbon offsets can be a part of achieving climate solutions or zero net carbon. But today, investors don't trust them. And when they don't trust them, they don't want to buy them. So we've been doing some interesting work around how can satellite technology help in create the transparency around deforestation, around burning of forests, but also the sequestration of forests. You can actually point these types of technologies towards them, towards areas that are forested or where there's mangroves, And you can actually capture with a high degree of accuracy the biomass and how much carbon that has sequestered. And that allows a higher degree of trust and transparency into the ultimate product that we'll be selling, which is carbon credits. Now, moving on from that, you also need to have financial trust in these things. And this is where blockchain technology has proven out to be helpful. You want to know that if you're an investor, that if you put $1 into this, that the money follows through all the way to ultimately to the person who's planting the trees. Now, that is another thing that technology does immensely well. And then finally, if you take this to perhaps the nth degree, it is exciting to imagine a world where today's cycle of releasing carbon credits is on a 2-year cycle. Imagine a situation where you can have real-life monitoring on these things, and therefore also real-life releasing of carbon credits for you and I to buy. I think all of those things are only really made possible by the immense step forward in technology we have. And it also allows us to think more widely about the terms digital finance. It is a lot of technologies that allow finance to flow, not just what we normally talk about, the basic things of payment structures, which are very important, but not the only thing. So I'm excited about the future ahead. And back to the original question, I see digital as an enabler for every single one of the SDGs, some more prevalent than others, rather than something separate from the SDGs. I think I'll stop here.
Thank you very much. I love the way you stop, and I think we are seeing this notion of digital being critical to the SDGs playing out during COVID, and in that sense, digital with the broader sense, not just digital finance, being telemedicine and education, and so that as a basis. Now, as financing is also an enabler for the SDGs across all of them, I think the combination of digital and finance, what we're talking here, it's a powerful enabler in that sense. Now, let me turn to Aiaze, from whom I have learned a lot in the last 12 months on all those matters of digital finance. On top of being leading our work on big FinTech governance, Aiaze was one of the lead authors of the report. So he's bringing that perspective as well. Aiaze, the floor is yours.
Thank you very much, Marcos. And I think a lot has already been said by my predecessors, so I'll just make my comments very short for this round of questions. I think, there's multiple ways in which digitalization is already very relevant to the SDGs, and I am not going to talk about the financial inclusion aspects, which is very obvious, and I think everybody now clearly understands. But I think it wouldn't be possible to have $1 trillion of green bonds if large data sets and real-time data flows on use of proceeds were not becoming the norm. Carbon markets, as Mikkel was saying before, wouldn't exist without sophisticated digital infrastructure. And maybe this is one of the spaces where we see the largest amount of innovation happening with blockchain and distributed ledger technologies, where we see a full disruption of the natural capital asset market. In many ways, we see natural capital-backed digital coins and tokens emerging like Cedar Coin, Carbon Coin, that really allow citizens to participate in climate action and climate mitigation and adaptation efforts in many ways, and direct their financing to reforestation efforts and other efforts that are important to them. And so this is a space where digitalization is playing a key role in the natural capital asset market. Another aspect is, and perhaps sort of pointing to some of the things that Anir said before, is in financing infrastructure, financing long-term development, but also unlocking access to capital-intensive utilities and services. In many ways, digitalization, because it allows low-cost fractional payments, is unlocking access to large-scale capital-intensive utilities and services, both in developing economies and in mature markets. So in developing economies, it will take the form and shape of pay-as-you-go models, rent-to-own models that unlock access to clean renewable energy, to tractors for farming and agriculture, to paying in fractional payments for education, for healthcare, etc. In more mature markets and more developed economies, it will take the form of circular economy models, if you would like, that allows us the co-use of cars, the co-use of bikes, the co-use of office spaces, etc. And so this is extremely relevant to both developing economies, mature markets. And maybe one of the areas where we're also seeing a lot of new developments in the alignment between digitalization and the SDGs is this growing surge in impact and robo-investing that are really putting, again, in the hands of the citizens, the means and the choice to make financing decisions that are aligned with their objectives, with their values, with their long-term priorities. And so these are all the different ways in which I would say digitalization is already supporting the SDGs. And as we can see, it's really part of our global economy and essential in rechanneling and repurposing citizen money and citizen finance towards long-term development goals. So I will just pause here for a second, go back to you, Marcos, and I look forward to the next questions.
Thank you, Aiaze. That's the moment now that I see if technology works and perhaps open the floor and see if there is questions coming for the audience. If there is none, then I actually wanted to bring it to a quickly rounded on a particular stakeholder, which is the SMEs. But before I go there to my panelists here, how do I know if there's any questions coming from the cyberspace? Well, I guess I don't know. So I'll pose to Aiaze and Mikkel. You've talked about a lot of issues here: governments, social protection, big things. As UNDP, we've been leading the technical work for the UN on socioeconomic recovery to the COVID crisis. And we've conducted 113 socioeconomic impact assessments around the world. And one common, there are many, but one of the big commons is the problem with SMEs and how SMEs, which are the backbone of most economies anywhere in the world, and 90% of the jobs in the developing countries, SMEs are in trouble, basically. We join up with the ICC and the Global Compact to create a program on SMEs digitization recovery. So my question perhaps is, as a bank, as a practitioner, as a government official here, what do you see is the role of digital in unlocking capital as well as capacity, innovation to establish SMEs, not to startups, but to establish SMEs? Let me start with Mikkel and ask the three of you to be quickly so we don't run into time here. Mikkel.
Yeah, so I'll try and do it quickly. I think that the critical thing that digital can help solve is reducing the cost of providing data to banks and from banks accessing this data. We appreciate that the data that we require from a SME to lend and get the trust that we need is a lot. And so digital have the ability to streamline that and therefore reduce the friction of that. And I mentioned that specifically in the mentioning of now that ESG has become, your ESG credentials have become so critical in lending opportunities for us. Every bank would ask these questions. We really need a lot more data on these things, and it's not a forte of the small companies. So there's a number of different platforms that now allows them to, for a small fraction of the cost that we used to see, actually provide that data, and this is useful for banks. So if I can only mention one thing, this is one place where it could unlock.
Thank you very much. Anir, any schemes on SME digital over there in Bangladesh you can quickly share with us?
Sure. So my government announced about $2.5 billion in incentive packages, primarily for SMEs and some large businesses to some extent. But SMEs, as you mentioned, about 87% of our employment and the market economy. And many of them are hurting. The banks are supposed to provide these loans. These are loans, not just handouts to SMEs. And the banks had a very difficult time identifying SMEs who are deserving because there is no credit history per se. There is no registration in many cases. So SMEs are informal, part of the informal economy. So we're looking at three things. The first is, just as we have worked on an eKYC for individuals, we're working on an eKYC for SMEs. Because there are different types of registration. Some are not even registered. So we're trying to bring some consistency, some order. And as Mikkel talked about data that you need for the lending organization. So this is a registration, a track record that will really establish the identity of an SME. That's the first thing. Second is digital credit. And that could come from many different, again, data plays an important role. Their credit history that will be built up over time, any digital footprints they have, money transfers that they have done digitally, which there are many mechanisms for. But they need to come together to give a digital footprint for the SME. So that will help us make credit decisions in a more seamless manner and unbiased manner. And the third is access to market. What we have seen during COVID period is that there was a huge upsurge in e-commerce. E-commerce was a fairly urban phenomena and a phenomena for the elite or the rich segments of society. During COVID, because people were not able to move, e-commerce went through the roof. People actually came online, and we introduced something called P-commerce, phone commerce. So people who could not come online on the internet, they could actually access e-commerce by calling into a national phone line, 333. So e-commerce, there are hundreds of companies that existed before, e-commerce companies, and some new companies also emerged during this time. Daily essentials, medicines, these were the commodities that were actually sold through e-commerce. So that allowed SMEs to do sell and buy in a very seamless manner, a low-cost manner during the COVID period. And I think that will continue to grow even after COVID and vaccination arrives throughout 2021 and beyond. So establishing an identity through an eKYC for SME, access to credit, and access to market through digital finance are the three areas that we're now currently focusing on. I will see a huge expansion in future.
Thank you, Anir. Aiaze, final words here on your side before we move to closing on the SME. Maybe if you can also describe what happened with EcoCash in Zimbabwe vis-a-vis SMEs, or any other example you have of a concrete work going on. Over to you.
Thank you, Marcus. So I think, yes, there's a lot of interesting things to say about the SMEs and the $5 trillion of credit gap on an annual basis that we need to provide for. And I think, as Mikkel was mentioning, in many ways, digitalization allows us to solve the data asymmetry problem in being able to more cost effectively do the due diligence and make credit decisions on SMEs. And there's multiple examples of innovations that are happening, for instance, in Zimbabwe, where the largest payment platform, EcoCash, has actually leveraged and harnessed all the transaction data and payments data that they have about SMEs in partnership with the Aiaze stock exchange to actually build an online stock exchange for fast growth SMEs to secure financing from domestic markets. And they're rebuilding the book value of these SMEs using transaction data, and they're performing due diligence on these SMEs using all that information that's available digitally to be able to actually list them on that stock exchange for local investment. I think the other thing I would like to mention is what we're starting to see now, and looking a bit forward to the future, is the rise of global digital finance platforms. And these big platforms emerging from e-commerce, from social media, are also playing a key role in solving the SME financing problem in very positive ways, because and a lot of SMEs and micro SMEs and individual entrepreneurs are also doing social commerce on social media. And so social media and e-commerce platforms are unlocking access to financing, are unlocking access to online markets for SMEs in a very big way. And this is very important in terms of tools that we can harness to accelerate financial inclusion and credit servicing to SMEs. But it's not just all upside, and I will just end with that comment. There's also a lot of downside to this. With these globally dominant e-commerce and social media platforms involved in payments and financial services, one could imagine that if a decision is made to streamline household essentials, for instance, in one particular market, say the US, for example, that can impact hundreds of thousands of SMEs sitting in that supply chain in developing economies. And in many ways, as an SME on these platforms, because you get credit against the assets that you trade, and because that history is not exportable from one e-commerce platform to another one, you're locked on that platform, and then that makes you more vulnerable to higher commissions, to pressure on your product prices, etc. And so one of the things that we are trying to advance with UNDP and UNCDF as a result of the work of the task force is really advancing governance innovations for these global platforms in ways that maximize the positive impacts that they're having on SMEs, but also mitigate the negative effects they might have on the SMEs and make sure that they can actually have a very positive impact, including across developing economies. So this is sort of some of the trends that we are seeing in response to your question, Marcos.
Thank you very much. Thank you for my three panelists. Let me start to bring this rich conversation together, and to help me do that, my partner in crime on advancing jointly between UNDP and UNCDF the recommendations of the Digital Task Force, which you just got a little bit of a glimpse, and I really recommend that anybody that's listening to us to go online and to look for People's Money Report. In the end of the day, it's your money. You know, it's your money that we give to Mikkel, and digital finance should help us tell him how we want our money to be used, and governments and everything else as well. So go in and look at the report. It's really important. But to help bring this to a close, let me, and to make sense of all of this, let me ask Henri Dommel from UNCDF, my partner in this process, to say a few closing words, and I'll come back at the end. Henri, the floor is yours.
Thank you so much, Marcos, and I hope you can hear me well. Yes?
Yeah, yes, please, go ahead.
So thank you so much. I think we heard a really fascinating and inspiring conversation with our panelists. And I also wanted to thank, in this concluding remark, the hundreds of individuals and organizations that has been actively engaged in shaping the task force research and agenda and the final reports. I think we heard really inspiring example of how the digital revolution and digital financing can really open new possibilities for the financing of the SDGs. If anything, the COVID-19 pandemic has really accelerated that transition and digitalization of the economies around the world, and that change is there to stay. At the same time, we heard from you, Aiaze, right now how digital technology can also lead to greater exclusion and more inequalities. And it's really up to us to make sure that this transformation is deployed in a way that is truly inclusive, especially of the most vulnerable population. And, I think if the report says the very strong message at the heart of the report is really to show that digitalization, when deployed with a strong intent on inclusion, makes it possible to really put the citizens back at the center of the global financial system and ensure the full social inclusion and economic participation as consumers, as savers, as borrowers, as investors. And the action agenda, which is developed in the task force, provide, I think, a really exciting and inspiring blueprint on how to realize, this potential of harnessing digitalization for the financing of the SDGs. Judith mentioned in her opening remarks the three interconnected areas of action, and let me repeat them very quickly here. First one is advancing catalytic digital finance solution with large scaling up potential. The second one is supporting the development of sustainable domestic digital financing ecosystem. And the last one is strengthening the governance of international digital finance. So I just wanted to share with you that at UNCDF, whose mandate is to make public and private finance work for the poor in the 47 LDCs, we are fully committed to support the action agenda embedded into the Digital Finance Task Force. And actually, this action agenda is very much aligned to UNCDF's own strategy, leaving no one behind in the digital era. Under this strategy, UNCDF is leveraging digital finance for the SDGs with a vision to promote digital economies that leave no one behind. And to achieve that vision, we are committed at CDF to use a market development approach that really seeks to address the underlying market dysfunction that excludes people at the last mile. So again, after, as mentioned by Judith briefly in her introduction, after co-hosting the Secretary of the Task Force, and as the report was getting finalized, UNCDF joined forces with UNDP, and we work very closely with you, Marcos, to develop this joint offer to take the recommendation forward. And in doing so, we are leveraging the comparative advantage and strengths of our respective institutions. And for UNCDF, our expertise in digital finance and our experience in a market development approach to promote digital finance ecosystem. And as we move forward in implementing this joint offer, I just wanted to share that for us, for both of us, it's really a platform through which we really want to nurture a continued engagement with the task force member, the broader UN system, and the international community to see how we can together develop initiatives which are going to respond to the challenge and potential of harnessing digitalization for the financing of the SDGs. And we heard again today a very exciting example from our panelists. And I think we are all committed to really embark on that journey and really contribute to that very important agenda. So thank you very much, Marcos, and back to you.
Thank you very much. And thank you very much for the trust and the partnership that we've established and will carry on going, making those issues a reality, especially for the most vulnerable people of the world. As he said, we have come together, UNDP and UNCDF, to provide the government with a comprehensive joint offer that builds on all the experience of digital financial ecosystems and all aspects of UNCDF, with UNDP, large work on planning on public finance and financial strategies to create an integrated ecosystem. We are piloting some of their work right now in Uganda, and we're coming to work with Anir in Bangladesh and in other countries going forward. I think the other big joint offer element that we have it with the support of Switzerland and in involvement of the government of Kenya, Aiaze has already mentioned, has to do with its governance dialogue on big FinTech. It is very, very important that developing countries have a voice in the governance of these big FinTech platforms, and that those platforms themselves realize the tremendous potential they have to deliver the SDGs and some of the risks they have, and internalize the SDGs in their operation. That's what we're trying to do with this dialogue, which we just had a high-level roundtable in the margins of the Singapore FinTech Festival yesterday. So now what comes next? We can see, and I think we've seen a huge demand from developing countries for the issues that we talked about here. In 2020, we experienced a significant uptake in requests from governments to support the various aspects of digital finance. We are therefore looking to accelerate our joint work in 2021 to better support address the specific needs of developing countries. This will include the scaling of our current work on digital financing strategy, expanding the dialogue into new directions, including the convening of working groups of big FinTechs, and support implementation of a new large-scale citizen-centric digital financial solution. On a global level, we are also aiming to create a global online convening platform to help facilitate the sharing of tools, case studies, guides, and regional relevant expertise from how to utilize the digital financing for the SDGs. For this, we need the global community to come together and to help support such a platform and all of the work done in this area. Indeed, as mentioned by the task force, we need the global community, member states, private sector, civil society, and ordinary citizens to play the individual role to enable digital financing to be used in an inclusive manner that help finance the sustainable development goals and leaves no one behind. With that, I want to thank again Mikkel, Anir, Aiaze, and everyone out of there listening to us. Thank the Singapore FinTech Festival for hosting us today and for the partnership of many years. Bid you farewell. We're coming to the holidays, so happy holidays to everyone. And may 2021 be more gentle to all of us around the world than 2020 has been. Thank you very much. Enjoy your evening, your afternoon, and your early morning like we are here in New York. Thank you. Goodbye.
Thank you very much. Bye-bye.